So as a practitioner of uncertainty, and by that I mean trading, you are going to find yourself choosing between trading an already existing pattern or waiting for a new pattern to form right before your eyes, and then you trade that pattern. Now, what do I mean by patterns? These are a repetition of price movements, which can either be in form of a double top, a double bottom, a head and shoulder, or an inverse head and shoulder, order block, and so on. So when you enter the market, the first thing which needs to come in your mind is that, am I trading an already existing pattern, or I'm waiting for the market to form a new one right before my eyes, then I can be able to enter. The moment you can answer this, then you are already a better practitioner of uncertainty. Now, the reason why I'm saying using the word practitioner of uncertainty is because the market seems not to know, we may not know exactly where the market is going to in terms of up or down, but based on a pattern that has already appeared, it gives us the clue. So you're in the business of uncertainty. Now, let me demonstrate this to you using the charts and then using a gold, and you will be able to understand exactly what I mean by practicing and being a student of uncertainty. So I'm going to clean all my charts, okay? And then I do it afresh. So I'd say, as a practitioner of uncertainty, you must be able to choose between trading an already existing pattern or a new one that is going to be formed right before your eyes. So there are three ways in which patterns are being formed. Number one, a pattern can be formed at a high, therefore corresponding with the market principle of selling high. Number two, a pattern can be formed at a low, corresponding with the market principle of buying low. And then number three, a pattern can be formed at a price difference point. Now, the concept of price difference point may be unfamiliar with you, and this is why I've broken it down in our YouTube here. You just need to come to Throne Trades, and then you will see price difference on EuroCAD. I've explained that concept, and I'm going to be using it a lot. You really need to get familiar with it. So once that is clear, let me just use the gold chart to be able to explain to you this principle of uncertainty and how to apply it with pattern-based trading. So let's say this is a high. And then from this high, we want to look for a pattern that we can actually begin to base our trading on. So now, let me just come here and I show you a pattern here. Now, let me rub everything off here. Our focus is here. So what do we see here? We see a high, and then price pulls down, another high, price pulls down, another high. So this is three, 1, 2, 3 touches. Now, these 3 touches here also has a double top because the market comes here and then cannot break further up. So there is a 3 touch, there is a double top, and then a double top is also the same as a resistance. And then from this resistance, we see a bearish engulfing candle here. Okay, what you call your order block, a bearish engulfing candle. Now, this bearish engulfing candle, there's a difference between this low and then this high, and that difference is exactly here. And that is the concept I get to introduce to you. So now, what do you see in this pattern here? This pattern has a combination of many things. The 3 touches here is a signatory of liquidity being grabbed. That is number 1. Number 2, the double top here, that is also a signatory of resistance. Price is being resisted from going further up. Now, the bearish engulfing candle, or what you call your order block candle, is a signatory that bears are active in the market. So if you look at this pattern here, it has a resistance, it has liquidity, it has bearish pressure. So it has almost everything that you need to be able to trade and make money. Now, and this pattern here appeared on a high. So the next thing you want to see is, we are going to trade based on this pattern that already exists. So you want to come back when price returns into this area later. Now that later can be after a month, weeks, or even a year. What do you see? So you need to realize that when price returns into this, that is where you're going to also look for another pattern, or there will be a reaction. And that's why I had said earlier on, as a practitioner of uncertainty, you can trade based on a pattern that has already happened, or wait for a new pattern to appear right before your eyes because price tend to react from one pattern to another. Okay. Now, once you have this in mind, the reaction here is what is actually going to prompt you to trade. Now, what do we see here? Okay. We see another liquidity being grabbed here. We see another double top here. We see another bearish engulfing candle here. Okay. And then we see also another break here. Now, price is reacting based on this pattern here. And that is where you're going to actually be able to trade. And we have actually, I traded this. We traded this in the group. Let me just show you. This is it. Before it could hit our take profit, you can see the price, everything. And then it also hit our take profit here, and that is it. Now we're trading an already existing pattern. Anyway, let's continue. Now price pulls back down into this area here. What do you see here? There is a pattern here that I also want to break it down for you. Now, let me examine this pattern here from this. If you look at this area here, this is a demand area. You have price pushing back up and then coming back into this area. So once price comes back into this area here, you see here, there is a low here, and then the market clears this liquidity. So you have a liquidity being cleared inside the demand zone, and then the market forming a high, coming back here, clears the liquidity. We have a bullish engulfing candle. Okay. Now, something similar to what happened here is happening here, but this one is for buys, this one is for sell. So what do you see here? You see liquidity being grabbed, you see support being formed, and then you see the market going bullish all the way to clear this other high here. And we've actually traded this, and I had sent it into the group. So let me just show you exactly what I mean by that. Is last week. Let me show you this. Okay, so this is the video in which I actually broke down that trade, and it's always on YouTube. You come to our YouTube, Throne Trades, and then you will see the video before. This is it 7 days ago. Centered versus uncentered. I was explaining gold on that, and that is where we actually got the trade. This trade, which I also, where is it? Here. This is the trade, and that is the result of that pattern. You can see where 1, 2, 3 entries, and this was the forecast was also sent into the group. I had analyzed it and sent it here. You can see. This is it. This is it. And then the dates, you can see the date that was on July 20th. Okay? July 20th. Now, with this being said here, what do we have to say now for this? So if you extend it here, price is actually, gold has come back into this area, and you can begin to see it reacting from here. So now there is a low here. So now price, there's a possibility that price could actually exist and pull back into this area. So before it can either break it to continue down or to continue up. But the reason for that is that price is reacting from a pattern to a pattern to a pattern. So you already have existing patterns that price can react from. So the next thing you wait for now, when the market opens, you monitor whether there will be a new pattern to appear. Okay, if there is a new pattern that appears, then you have all rights to trade it. And like I told you, I always journal my psychology, my risk management, and also my fundamentals on X. That's why I posted this earlier on today. As a practitioner of uncertainty, you can trade based on a pattern that is already happened or wait for a new pattern to appear. So these are the patterns that have already happened. These are the patterns which have already happened like that. Do you see now why you just have to be patient for a new pattern to appear? And by that pattern, I mean a double top, a head and shoulders, an inverse head and shoulder, double bottoms, order block, and all of that. And then you can be able to trade. Okay. So if the pattern doesn't appear, you use what is already there. And if what is already there has left you, you wait for the new one to happen, and then you trade. So you have to really find a way of simplifying your trading.